What's up, Mavericks? Are you looking for business funding? In today's world, getting funding for your business isn't as simple as walking into a bank and walking out with a check. Whether you're after a loan, a grant, or something a little more outside the box, funders expect documentation, they want details, and they want to know you're not a risk. But not to worry, if you're feeling overwhelmed or don't know where to start, I've got you covered. In this video, we'll walk through the exact steps you need to take to get funding for your business, whether you're brand new or already up and running. By the end, you'll know what funders are looking for, how to prepare, and where to find the right option for your business. So let's get into it. All right, before we dive into more traditional funding, let's talk about ways to fund your business without taking on any debt. First up is small business grants. This is free money you don't have to repay, and yes, it is real. You'll find grants from government programs, private companies, nonprofits, and even local economic development centers. The catch, grants are super competitive and usually require an application, a strong business story, and sometimes a lot of paperwork. But still, if you qualify, this is one of the best ways to fuel your business without going into debt. And a good place to start is grants.gov or your local small business development center. You can also check out programs like the FedEx Small Business Grant. There are even niche grants for specific industries or underrepresented business owners. Another option is crowdfunding. Platforms like Kickstarter, Indiegogo, or GoFundMe let you raise money from the public in exchange for a product or a reward, or just because people believe in your mission. Crowdfunding does take work. You'll need a solid pitch, compelling visuals, and a promo strategy, but it can generate cash and buzz around your business at the same time. You can also explore other creative options like pitch competitions. Yes, that's like Shark Tank style, but local ones. Business accelerators and incubators that offer cash, mentorship, or office space. And of course, funding through friends and family. The bottom line is this: you might not need a loan at all, but if you do, that's what the next part of this video is for. Let's talk about how to work with a lender. Grants and crowdfunding are awesome, but they aren't always guaranteed, and they're not always enough. If you need a bigger chunk of funding or something more reliable, a business loan might be the way to go. Business loans can give you access to serious capital if you're prepared. So if you're thinking about borrowing money for your business, here's what to do before you apply. First things first, why do you need the money? The reason you need funding isn't just important for you, it's one of the first things lenders will ask. Are you buying equipment, hiring new employees, covering payroll, or purchasing inventory? Or are you trying to get a brand new startup off the ground? Lenders want to know their money is being used for long-term value, not just to slap a band-aid on short-term problems. That means you have to get specific. Make a list of your funding needs and be ready to explain how that money is going to benefit your business over time. Once you've got your why, it's time to figure out how much you need. Borrow too much and you're stuck with extra fees and interest. Borrow too little and you might get halfway through the project. So take the time to price everything out. Equipment, payroll, inventory, the whole 9 yards. Don't forget sneaky stuff like taxes, shipping costs, or a cushion for unexpected delays. Put it all into a spreadsheet, write it down, or run it through an accountant. Just be ready to back it up, because when you apply, lenders are going to want those numbers from you. And just because someone will loan you money doesn't mean you should take it. Before you hit submit on any application, you need to know what your business can realistically afford. Lenders look at 3 formulas to make that decision, and so should you. The first one is DSCR, debt service coverage ratio, which is your net operating income divided by your annual debt payments. This number should be above 1. Next up is your DTI, your debt to income, which is your personal debt divided by your income. Aim for 36% or less. And lastly, ROI, return on investment. Will this loan actually make your business more profitable? If your DSCR is low or your DTI is high, that's a red flag for lenders. Run the numbers before they do to avoid loans that could put your business underwater. Now, let's talk credit scores. It's not the only thing that lenders look at, but it definitely is a big one. Most banks want to see a FICO score in the high 600s or better. If your score is lower than that, you've still got options, but expect higher rates or shorter terms. So before you apply, pull your free credit report. Look for mistakes, pay down your balances, and lower your credit utilization. And be sure to skip the scams. Nobody can fix your credit overnight. All loans are not created equal. Don't waste time and money with the wrong one. Here's a quick breakdown of what's out there. Term loans offer a lump sum you pay back over time. These are great for big investments. SBA loans are long-term, low-cost loans backed by the government. Short-term loans offer fast funding with short repayment terms. Lines of credit give you flexible funding you can can draw from as needed. Startup loans provide funding to new businesses. Equipment loans are used to buy equipment. Invoice financing lets you get paid now on outstanding invoices. And finally, merchant cash advances are expensive but might work in a pinch if you got consistent credit card sales and poor credit. Your goal is to match the loan type to what you actually need. Don't use a short-term loan for a long-term project. Pick the type that fits your business goals and your current stage of growth. Now that you know what kind of loan you want, it's time to find the right lender. Here are your options. Banks and credit unions have low rates, but also strict requirements and long wait times. SBA lenders like banks, credit unions, and nonprofits offer government-backed, low-cost loans, but expect lots of paperwork and long wait times as well. Online lenders are fast and flexible, but typically more expensive. Nonprofits and micro lenders are great for small loans or underserved businesses. Just be sure that you don't just go with the first name that pops up on your internet search. Take the time to compare your options, look at rates, fees, funding speed, and credit requirements to find options that work for you. And before jumping into those applications, be prepared by getting your paperwork in order. At a minimum, you'll need to prove your business can repay the loan. So here's what you might need: your balance sheets, profit and loss statements, tax returns, bank statements, business licenses, and your credit reports. If you're a startup, you might also need a business plan, projections, and resumes. And some lenders want collateral too, like equipment, inventory, or personal assets. The bottom line is that the more prepared you are, the faster this process is going to go for you. So now it's go time. This is where your prep pays off. Whether it's a bank, an SBA lender, or an online platform, be ready to explain how much you need, what it's for, and how you plan to pay it back. Lenders will pull your credit, verify your docs, and decide if you're a good fit. Once you get offers, compare everything, not just the interest rate. Look at fees, repayment schedules, prepayment penalties, all of it across the board. Trust me, the fine print matters. If you've made it this far, congrats, you're almost there. Once approved, your loan goes through underwriting, closing, and funding. Now it's just a waiting game. Online loans could hit your account the same day or the next business day. SBA or bank loans, you might be waiting a few months. Make sure to keep in touch with your lender to avoid any possible delays. Getting funding isn't always easy, but if you know what to expect, do your research and come prepared. It won't be so painful for you. Understand your goals, know your numbers, pick the right funding, and only take on what your business can actually handle. If you want to make this whole process easier, check out our list of the best small business loans. It's linked in the description below. Or if you're ready to take action right now, find out what you pre-qualify for in minutes at merchantmaverick.com/pre-qualify. Thanks for watching, Mavericks. Now go get that funding.